Fundamental versus technical analysis. Time is more valuable than money. You can get more money, but you cannot get more time. Jim Rohn. Honestly, I'm still so baffled that I've just even had the opportunity to create this. I think it's so awesome that I can help other people save an insane amount of time learning the things that I struggled with and that took me so long to create or to understand. So I'm just excited for you guys. Anybody who takes this course, I think it's super cool. What is it? Fundamentals are generally the supply and demand that drives the underlying price higher or lower. This is different than the news and the fear, greed, emotions that drive a stock price to extremes. Example, if it's a good company and makes money, and the outlook is good for it to continue to do well, then this makes its stock desirable and therefore should drive price higher. If the company is in a dying industry, or maybe it's just failing to compete, and the outlook is not so good or bad, and they're not making as much money, or they're expected to not make as much money, then this will drive the stock price lower. Technical analysis is the art of using a chart to interpret a stock's behavior and direction by use of patterns, indicators, and price action, not unlike what you're learning in this course. I like to use a combination of them both when I can. If it's a crap company, then I'm not looking to buy its stock, nor would I expect it to perform well in the future. I feel like that's pretty self-explanatory. It doesn't mean that it won't. I just like to put all the variables that I can control in my favor. Supply and demand. So there are certain instances and scenarios that cause supply and demand to become out of balance and create excellent opportunities. Example, it's 2021 and due to COVID, lots of industries slowed down or stopped production. Once restrictions started to lift, demand for virtually everything happened all at once as the economy started to become productive again. But that was after the entire economy of almost every nation in the world was shut down, either fully or to an extent. And so we really got to see how important and how connected we are globally to these different products, these different services, these different businesses, right? The price of lumber quadrupled as demand for new housing hit new highs, yet little wood was available to build homes. In March of 2020, the price of silver dropped from $20 down to $12 and then went to $30 in months. This happens all the time. You just have to be paying attention to what's going on around you. It's part of why taking a course like this is so crucial moving forward. Things are changing seemingly by the day nowadays. So here, and we'll use the silver chart as an example first, was that I was trading silver at the time. The stock crash happened, and then it went all the way down to $12. So I knew that silver should have been valued at least $18, if not higher than that, because it was trending higher over several months. And when it happened, and it dropped all the way down to 12, then I knew. I said, okay. I said, it's dropped 30-something% from the highs. This is not a scenario that can last forever, just due to the demand, supply and demand fundamentals that I know and understand from silver because I've been following it for so long. And so I bought it like crazy, and I made quite a bit of money. Whenever it ran up here, I had no idea it was going to do this well, but it was something I was already interested in. In my opinion, it became a lot cheaper, so when something goes on sale, you buy it, and it turned out to work out very well. And then lumber, this is just an example, I didn't trade it, but my friend and I were building parts of fences and full fences at the time, and I was watching the chart, and he had accumulated most of his lumber around here, and I had to buy enough lumber enough wood to build a gate, in this area, and paid about half as much money for a 16-foot gate and fence as I did for an entire 90-foot stretch of fence, a couple years ago, whenever the price was down here. It was just absolutely insane. But and then now we can see as supply and demand, as now demand has remained higher, but supply has met demand. So now the price is starting to equalize and it's coming back down to reality, right? So average person doesn't know how to take advantage of an opportunity like this when they see it starting to happen. Once you learn how to trade and you understand what's going on here, you can absolutely take advantage of any move like this. And honestly, a lot of it is just, it's not necessarily luck, but it's letting things play out. This is a point where there was exuberance. There was, at this point, people thought that lumber could go to 5,000, 10,000. There's no limit, right? And those are the ones that got burned. But those are the ones who understand how to trade. They help you make that last push of amazing profit at the end. All right, using trend lines. Trend lines are one of my favorite tools to use, and I've mentioned that I use very few, so you know it's important. I connect trend lines to points of market structure, previous highs and lows, though there are other ways that people draw them. Trend lines can help identify when momentum is accelerating or slowing down, or when it has reversed. This information is important as it can help you identify when you might want to take profit or when you might want to wait. This all depends on your strategy, but remember, we never truly know how long or how far a stock will run. So having framework set in place that gives you cues works to your advantage over the long run. I also draw trend lines, or I draw lines to identify areas of consolidation so that it becomes easy to see when we are moving from transition to trend. So you might actually recognize this earlier. I used a part of this to explain the sideways transition, right? So here we have a sideways, non-directional. It's going nowhere. There's no opportunity here. But all of a sudden, it breaks out. Okay, so now we watch it, and we see that it breaks from the consolidation, and it starts moving higher. Okay, so as these new highs and lows are formed, you know, and this doesn't happen for every single stock, every single move, but it happens a lot. And whenever the market's trading, you can still use it to help what I call framing or adding context to the market and helping understand what's happening. And trend lines are a bit of a self-fulfilling prophecy. You know, there's nothing magical in stock trading, and that's really, really important to understand. Because you can say, well, you know, you hear a person talking and be like, well, you know, I drew this trend line here and it came down, and I knew when it came down here, you know, and it respected it and started moving higher. You know, respect it like it understands it, like it knows. That's not the way the stock market works. But like I said, it's like a self-fulfilling prophecy, because the way that you draw trend lines are pretty much are similar. Like I said, some people do it differently, but it's pretty common to do it the way that I do it. And so people will, because you're talking about millions of potentially other people who are trading the same exact thing, they're looking in the same areas that you could be looking at, and so they're looking to buy, and so it turns into a self-fulfilling prophecy. It doesn't always happen like that, but oftentimes you see that trend lines will hold. It will come down, it'll test the trend line, it'll move away from it. So, you know, not to get too far off topic, but so what I wanted to show with this was we can see how after this point here, then now we can draw this trend line, right? I didn't draw this trend line in the beginning. You have to wait for things to develop before that happens. And so now it comes up here, it makes a new high. Okay, the market's trending higher. Now it comes down and it tests it. Okay, that's normal, natural pullback, that's fine. But then it starts to dig into it a little bit, and you go, okay, well, in my opinion, if it's not holding the trend line, or it's not moving higher and staying away from it, that's a sign to me that the trend is starting to weaken. Okay, it doesn't mean that you have to do anything, but it's kind of like an alert, you know, a red flag. Hey, pay attention here. Okay, so we see here, doesn't quite break the previous high, right? Comes down here, breaks through it. This is more of a sideways, you know, non-directional kind of movement, and you can see how it moves underneath the trend line and then ultimately moves lower breaks it, and now we're starting to see lower lows, lower highs, and this is transitioning into a downtrend, right? So the stock begins to lose momentum as it has a harder time maintaining the trend line, not making new highs anymore, and a new trend line is formed, or a new trend is formed. Excuse me. So all that to say, a trend line can show you, and it can explain a lot of things. A simple line, if you know what to look for and why you're looking for it, it makes all the difference in the world. This took me years to figure out the importance of this, and to get rid of the fact that there's no magic here. But you're able to use it to interpret what's actually happening, not what you think should happen or what you want to happen. You can digest and understand this information in real time, and that is what helps you make money. All right, here's a trendline example, okay? And they call it technical analysis in art because it really kind of is. It takes time to develop things, but what I'm pointing out and I'm showing you is going to help you drastically accelerate that learning curve. Because once you know what you're looking for and why you're looking for it, then you can easily put things into different categories. Like I mentioned, the transition, the uptrend, the downtrend. You look at this stuff enough and you study it enough, you begin to pick it out, and eventually you'll just never even be able to not see it again. Like whenever I look at a chart, there's nothing on it, I can immediately see all these different things before I even draw it, right? So here we have a, first thing to notice is that it's an uptrend, right? We see here that there's a period of, or there's a couple, areas of, congestion, of consolidation. All right. We see that we've got, essentially one move here before it breaks higher. So that's enough of a move to be able to, enough structure to be able to draw a trend line here that makes sense. You get this higher move, and then you have this consolidation here, and it breaks out even higher. So this is showing me that this sucker wants to go higher, right? So, and it's an important thing to recognize too, is because after this trend line here is already pretty steep, kind of like a 45-degree angle, stocks can only take so much buying pressure or selling pressure for so long before they essentially burn themselves out. Now they can generally stay for longer than you think they can, but it's still something to be aware of, because what I'm showing here is that the acceleration, the momentum actually increases, right? We are now drawing a steeper trend line here as it breaks out to new highs, but then you can see how it quickly kind of fades out from that, right? So it's just important. It's another thing that's important to realize, important to understand, but a lot of times this is where not things get dicey, but where it's kind of like the final stages. It's kind of like a blow off top, or the final run of a move that happens before kind of a stock collapses on itself and starts heading lower. Will be this pickup in momentum towards the end. You can actually see it up to 3 times. 3 times is about the most I ever see it, where it's got a trend line and then it breaks higher and you draw a new trend line, steeper trend line, and then another one, steep trend line. That sucker will burn out. It's only a matter of time at that point. But again, there's really, really good money to be made through there. So it's something to identify. It's something that you could take advantage of, and it's something you could build strategy around. All right, indicators. Be careful here. I mentioned this previously. All indicators essentially display what the chart is already showing, but in a different way. A combination of momentum, price, and volume usually. Any advantages I have found are usually very inconsistent and therefore not worth incorporating. Most people, as I did, get caught up in believing that they can predict what will happen in the future, which, as I've mentioned, is impossible. Every single moment in history is different than any other. They give the illusion of control, so my very strong advice is to just be careful. You are much better off studying the price action, which we will go into much greater detail in the following course. And price action is really just studying the candles, how they move, like I did with the trend lines, as far as like showing the consolidations and showing the trends. That's more than enough to be able to understand what's happening and create strategy around, along with using other time frames. You don't need fancy indicators that are essentially, they're built with those that high, low, open, and the range that I showed you. They're built off of that, off of the momentum and the other things that they pick up based on those things. So if you can learn to read the charts well enough and understand to see what they're showing you, you can actually read the indicator without the indicator being there, if that makes sense. All right. So here are a few of the most popular indicators. RSI is the relative strength indicator. MACD, moving average convergence divergence. EMA, exponential moving averages. And for the most part, they visually show different levels of volume. I'm not really going to spend any time going into them because, like I said, I really encourage you and anyone to pretty much steer clear. It's not worth it. You can play around with it, and you can do that. You can essentially do that on your own dime. I'm not even willing to really go down that road.